Hi guys, time for our market outlook for next week, and if you haven't subscribed to our channel, please do so to just not miss any further updates, because we have more sessions in the planning. And just leave a comment below the video if you have any questions for any currencies, any markets, or anything you'd like us to check out. Today, well, the crypto market is obviously the latest talk in the community. What do we see there? Clear negative price sentiment is the key takeaway from those as well. Why? Risk sentiment has obviously kind of taken a breather, we might say. Stock markets down. Federal Reserve giving us potential information, new information in September. We have some news brewing this week. Not too much is coming up, but we shall see on the economic calendar what's up and rolling. One of the major news events is the Australian Central Bank, the RBA, 4.35% cash rate, not going to see potential adjustment. Recent figures from Australia, consumer prices have not really changed much, and hence the central bank might actually leave rates unchanged for now. Let's move to the Australian dollar. It's obviously kind of gearing up quite some negative momentum, which is in line with the overall negative sentiment in markets. What's happening? Technically, we saw last month, July, with a big sell-off after a potential breakout in the making, but the market retraced lower, which is now the negative sentiment we might see continuing, with further price pressure offering downside motivation. Next line of the sand, supportive wise, would be the 64 handle, where the market's momentum might continue again slightly higher. However, the negative price sentiment can be seen. Last week was kind of a bit negative following the week prior, so from all the way to these upside areas, negative price sentiment being the key takeaway. Chart of the day, we might say, is the volatility index. We can see it last week, boom, explosion towards way higher levels. We see that especially on Friday, the huge move to the upside happened. This is the VIX, volatility on the S&P 500. Basically, non-farm payroll data on Friday last week were way lower. Expected 178,000 rough newly created jobs, only 114,000 jobs were created. This is obviously the negative sentiment we can see right now. Economic data. Why? The Federal Reserve obviously had raised rates basically to cool economic demand, and this is clearly now what's happening. Companies hire less people hired, negative sentiment causing all the risk sentiment to be negative. The Australian dollar weaker. Risk on currency is the Aussie, which is losing steam. Stock markets down, cryptos down, and volatility obviously rising, with a potential negative sentiment and trend in the near upcoming future. We are about to tag here on the VIX the 50 moving average. A break to higher levels or beyond that might unleash further negative market sentiment, which is clearly in the making right now. If we see what we've had during COVID, basically last time, couple years back, we potentially might say that upside potential could be the result in the end. Clearly, at least this leaves a negative mark here in markets. Let's step back for a second. We had the Federal Reserve on Wednesday with the interest rates decision. No rate adjustment, no rate reduction was happening. However, press conference wise, Jerome Powell opened up the door widely for a September rate cut, which could be brewing. A rate cut in September obviously would be something negative for the dollar. Let's examine this. The US dollar has been under pressure, but only on Friday with the non-farm payrolls. On Wednesday, the market didn't do anything of utmost negativity or positivity. The event kind of priced in beforehand. What is priced in, or as expected from market participants, is clearly what has not really moved the market so substantially. But obviously kind of the news in September could be something of a potential big interest moving forward. That's the story for this one, right? Australian dollar, US dollar. What else do we have brewing in this upcoming week? Canada, news from Canada. They quite oftentimes fall on the NFP, the non-farm payrolls, Friday last week or this week on Friday. But now upcoming next week, employment figures are coming up in Canada, and the Canadian dollar has been also under pressure. Let's examine the loonie, as it's called. It's currently trading quite weak. Not currently. Actually, look at this long-term trend. The market moving to way higher levels. You can see this red-colored rising trend line. Now a breakout might be in the making, right? So the market moving constantly to higher levels and retracing. And now if the market is basically able to break higher, two things might happen. First of all, a potential strong push to the upside, obviously being the key element here, which could cause the market to move way higher, or a potential retracement all the way to retest this breakout zone. And if the market tests this breakout zone, then thereafter the trend or the explosion to higher levels might occur. That's actually the two opportunities we might see here in the dollar against the Canadian dollar. A push to higher levels actually happening potentially. The euro already gearing up much momentum against the Canadian dollar. We can see it here with the news, the NFP news, that the market might actually kind of really test the upcoming next levels anytime soon. So Canadian dollar pretty much under pressure. Figures are and were not really bad from Canada. So why is the Canadian dollar losing steam? Well, one reason could be it's now following up with oil markets to some extent. Oil prices were actually quite positive this week. The market was really on top of this 75 area. It really was actually able, or nearly able, to test the breakout here, the 80 US dollar level. However, pressure happening then basically Thursday, a bit of a correction, which still could have been just a correction after Wednesday up. Oil market slightly correcting on Thursday, but Friday the non-farm payroll figure is exactly basically calling for negative price sentiment. If the economy is weakening, if employment figures are down, then obviously the key takeaway would be the soonish demand in oil likely going to be diminished. Weaker or less demand in oil would obviously cause prices to fall. That's exactly how we see this, and the breakout which was happening here now to the downside, clearly in the making, and it seems like the market might be ready to actually test lower price levels. Let's observe on the monthly chart. We are early, way early in the month of August. Let's observe if the market is able to celebrate some potential here right on top of this 50 moving average. If so, upside potential might occur, and another push to higher levels could be the outcome. However, it doesn't really look like this at the moment. The market might just simply start and basically weaken somehow. Risk sentiment. We talked about cryptos early on, and now we can observe the 70K handle is kind of quite far away right now. Based on daily charts here, we see that Bitcoin was able, and that's the fresh month here, we can see 50 moving average is a key takeaway in this market, and it was actually for a quick while helping the markets to basically see a recovery. Thursday this was. Friday, the NFP data was negative though, and the NFP data then simply caused the markets to weaken. Now Saturday, the market is starting to appreciate somewhat. Whether this is going to be enough to cause upside potential might be in question, as the trend looks like quite negative, and downside potential might occur. Let's see. Pin bar candlestick is still from, and based on the monthly chart, something we see here as of being somehow supportive. And let's observe whether the Bitcoin market might be able to rise. A bit of a potential safer entry above the high could be of particular interest, at least for Bitcoin. Ether is kind of quite negatively behaving. Next stop 50 moving average, again, on the weekly chart could add some support. XRP is kind of interestingly as well, correcting quite sharply. Again, the negative risk sentiment, that's the bottom line, weighing on the crypto market as well. However, if we see on the monthly, if the 65 handle, 0.65, can be broken to the upside, then we might see that XRP is going to appreciate again somehow further. And instead, we have Litecoin kind of quite on the weaker side here. We broke the 50 moving average, retraced all the way towards it, and are now breaking away. So this one doesn't really look positive at all whatsoever. Let's stay with the risk sentiment and move towards the indices right now. The S&P 500, weak. This looks like a bit of a more pressure might be brewing in this market. The S&P had broken below the 50 moving average, and again, the market weakness could take over negative price sentiment. We are not far off from the next support level. That's the 5,260 area. This could be the next line of potential support. Thereafter, we have several zones which could act, including the 50 moving average here, as a line of support, and then all the way down towards the October 2021 resistance area could offer next support. Whatsoever, we see markets are basically quite negative at the moment. The Dow Jones as well had taken over again. Negativity here, which still the Dow Jones is within the uptrend market motivation. Crypto market, tech markets, quite one thing in common. The NASDAQ, as we can observe here, is quite weak. But again, this is the interesting markets environment here, and we're gonna observe it in our channel together with our guys trading together via WhatsApp, observing obviously on how we find potential entry opportunities as we see some sort of support area, recent resistance, which is basically causing the market to now potentially find some support, might act somehow positive. Let's observe on how this one goes soon. That's for the indices, and last but not least, precious metals. Well, whatsoever is happening here. We see stock markets weaker. Traders and investors might actually free margin from their trading accounts by closing positions in those markets as well. The gold price weakening somewhat in line with the negative sentiment for the economy. Silver starting to appreciate slightly, but also silver being quite shaky. Obviously, if the economy would weaken, the demand in silver might actually weaken as well. Hence, prices of silver could fall somehow further. And we have to look into this also and then when we meet up in this coming week. Guys, what else is brewing? Well, the Japanese yen is still continuing with its positivity, right? So who else would have thought that the market is weakening so much here? Well, it looks like there is a correction potentially underway. This rising trend line we draw in last week, last week, same. But currently we have already crossed this one. Does this tell us that further weakness might be here to come? Well, it could. At least the market is currently celebrating a bit of a break to the downside here, which could be in the making. And in this case, we could see that the dollar against the Japanese yen might actually continue to weaken. 50 moving average broken. Dollar JP down. We have other Japanese yen pairs which are also trending to the downside. The euro against the Japanese yen, among others. So all the Japanese yen pairs are seemingly weak and very weak, and the correction might actually continue. We see that the recent resistance line, or say at least this imaginary resistance line here, and the recent breakout are now causing the demand for the Japanese yen to potentially continue further. So what else is happening? Risk off sentiment, Australian dollar weaker, the US dollar playing a bit of a role here, volatility index rising sharply, Australian dollar losing steam, Canadian dollar losing steam. We have another information coming up in this next week in regards to the New Zealand dollar, but apart from the Australian dollar's interest rate decision and employment figures from Canada, we might have a rather data light week. What else is brewing in markets? Well, geopolitical tensions are the key takeaway for now. Middle East, any retaliation from Iran. Israelis are obviously preparing. Hezbollah might fight as well over there. So that that a huge conglomerate of geopolitical tensions might actually be behind as well what is on the fundamental side brewing in regards to equity markets showing some negative price sentiment in the future. Stay tuned, talk to you soon, and again, leave your comments below our video if you want us to analyze the markets more. Bye.